Morning, my name is Robin Miller and I'm Corporate and Tax Counsel with Pro Bono Partnership of Atlanta. Welcome to this morning's webcast, the topic of which is thanking donors the legal way. As we move into December, which is usually a very heavy donation request month, we thought it would be appropriate to talk about how to acknowledge those donations as they're received. This topic is a huge topic and we're not going to be able to cover everything. But before we get started, I want to spend a minute talking about the mission of Pro Bono Partnership of Atlanta, which is to provide free legal assistance to community-based nonprofits that serve low-income or disadvantaged individuals. And we do that by matching them with volunteer attorneys who assist them with their business legal needs. Turn to the next slide, you'll see the requirements for becoming a client of Pro Bono Partnership of Atlanta. You must be an existing 501c3 organization. You have to be located in or serve the greater metropolitan Atlanta area, and you have to serve low-income or disadvantaged individuals. In addition, you have to be in a position in which you can't afford to pay for legal services. If you think you might qualify and you're not currently a client, please visit our website at pbpatl.org for more information. I also need to briefly mention that today's information is general information and is not specific legal information. If you have any real questions or concerns that are specific to your individual situation, please be sure to reach out to an attorney or an accountant regarding these issues. In addition, this webcast today is copyrighted and owned by Pro Bono Partnership of Atlanta. So now let's get to the good stuff. I want to start out first by saying that there's a really excellent publication by the IRS. I know you're probably shaking your head saying, really? But publication 526 is available at irs.gov, and there's a link right here, and it covers every possible charitable contribution issue that you can imagine. So it will cover in far more detail some of the things that we're going to cover today, because we don't have time to cover every area today. We're going to be covering the areas that we most often see for our clients. So now let's turn to what is a charitable contribution, because we need to set the stage for, if we're talking about thanking donors, we need to know what is a contribution. So the IRS defines a charitable contribution as a donation or a gift to or for the use of a qualified organization. And for our purposes, we're talking about our clients, our 501c3 public charities. So they qualify as a qualified organization. And so the context of my entire conversation this morning is going to be around those who are 501c3 public charities. So if they give a donation or gift to a qualified organization, it has to be voluntary and made without getting or expecting to get anything of equal value. And that's what constitutes a charitable contribution. But there's another important element, and that involves donative intent. So it has to be voluntary. It can't be an exchange transaction. The donor needs to give it the donation without any expectation of getting something of equal value in return. Now there are abilities to get what's called a quid pro quo donation, which is something back in return, but something that is less than equal value. And we're going to get into that a little bit more later. There's also something known as the safe harbor rules. And so there are certain circumstances where you might sort of get something in return, but it falls under these safe harbor rules and it's not considered something of equal value. And a common example of that is if somebody donates millions of dollars to build a building at a university, the university may name that building after that person. And the naming of that building falls under that safe harbor rule, and that doesn't constitute something of value in return. So now that we've defined what constitutes a charitable contribution, let's talk about what is not a tax-deductible gift. It's important to know what is and what isn't. So gifts of services, time, labor, effort, are not deductible. So all of our wonderful volunteer attorneys who donate their time to our clients cannot take a deduction for the time that they give to our clients in providing them legal services. Discounts are also not deductible. So if a business gives a discount to a nonprofit on a product or some other service, that is not deductible. Gifts to or for the benefit of a specific individual are not deductible. So I can't give a contribution to a charity and then have that charity pay my child's tuition at college. That is not deductible because it's going specifically to pay for my child's tuition. So you can't do that either. Contributions in which the donor benefits. And again, we've talked a little bit about that in terms of getting something of value in return. And that's something you need to really just be careful of as you move forward in receiving donations, is what is the donor receiving in return. And I also want to mention the cost of raffle tickets, because that's a very common issue that comes up a lot. And when you purchase a raffle ticket, you're purchasing a chance to win. So you're not really giving a donation, you're purchasing a chance to win. So it's also not tax deductible. But I want to take a step back and mention a couple things. One is that the donor may have really great donative intent, but may not know the rules and may not understand that there are some of these limits. So please try and educate your donors, and donors need to try and get educated as well. But I also need to say that sometimes not everyone has donative intent or even a proper intent, and so you should be on the lookout for certain situations where people may try to potentially conduct some kind of fraud, and you really need to be sort of aware of and looking out for those situations as well. Most often it's going to be that the donor just doesn't understand or know the rules, but just be on the lookout for that. I also need to now turn to another very complicated area of what is not a tax-deductible gift, and that is the use of space. The most common area we see is what we call partial interest, and whether or not you can take a deduction for that. And partial interests usually involve the use of a home, office space, vehicles, condos, vacation home rentals. Those are generally not deductible. And I've given you two examples here because it really kind of lays out the scenario. In example one, you own a 10-story building, me being the donor owns a 10-story building, and I decide that I'm going to donate it rent-free, the top floor, for a charitable organization. Well, because I own the building, I haven't contributed, actually, that partial interest of the 10th floor to the charity. And since I haven't actually given it to them, and I still own it and control it, there is no deduction permitted. Another really common scenario that comes up in a lot of our silent auctions is the one at example 2. So Mandy White owns a vacation home at the beach that she sometimes rents out to others. And for fundraising auction at her church, she decided to donate the use of this beach house for a week. At the auction, the church received an accepted bid from Lauren Green equal to the fair rental value of the home for a week. And Mandy cannot claim a deduction because, again, she hasn't given control over that property completely to the charity. In addition, Lauren can't take a deduction because she's purchased the use of this property for a week. So she's not giving a donation either. She's getting something back of equal value in return. These examples actually come straight out of Publication 526 from the IRS. Now there is something called a fractional interest, and so when you're dealing with property, like I said, it gets very complicated. So if you're not in one of these two scenarios, and there's maybe a fractional interest, which often involves artwork and other complex areas, there is a potential chance that it might be deductible, and you should really reach out to your accountant or attorney to fully explore that. But most often, example 1 and 2 take up what our clients tend to encounter. And again, in very limited exceptions, there are situations where a partial interest is deductible, but it is very limited. So now that we've talked about what is a charitable donation or contribution and what is not deductible, let's talk about what happens when you get that donation and what has to happen for the donor to be able to take a deduction, and what the charity's obligations are as well. So the IRS imposes record keeping and substantiation rules for donors and for charitable organizations. For charitable organizations, they have what are called disclosure rules. The charities must disclose certain information about certain types of contributions. And we're going to get into all that next. But I want to point out another IRS publication that's written in plain English, and that's Publication 1771. And it goes through all of these issues that we're going to talk about today as well. And the link to that is below. We also, I think, have a link to it on our website. I also want to mention that there are special rules for motor vehicles, boats, and airplanes if they're donated, and also for any non-cash contribution that has a value that exceeds $500. We're going to talk about that a little bit later in the conversation today, so hold on to anything related to that until later. So now we're going to talk about things other than those. So the general substantiation of a donation. You have to have a record of the contribution if you're going to take a deduction as a donor. And what that has to be is, it can either be one of two things: a written communication from the charity, so a thank you donation receipt letter, which we recommend that all of our clients do for all donations, or a donor can actually use a bank record, like a canceled check, or in many situations. We're going to qualify that in a minute, but those are sort of the two options in general. Either one must have the following information. It must have the name of the charity, the date of the donation, and the amount of the donation. Now, there's an exception, of course. For donations of $250 or more, the donor must receive a written contemporaneous receipt. And we're going to break that down a little bit as to what it means to be written contemporaneous receipt and what has to be included. So the donor has to get that from the charity acknowledging the contribution before the donor can claim a deduction on his or her federal tax return. Donations that are made throughout the year to a charity, or often that happens with churches, those can be aggregated into one donation receipt with all the proper information. So what does this written acknowledgement have to include? What is the content? It has to include the name of the charity. It has to include the amount of the cash contribution or description of the non-cash item. And it has to contain one of the following. And we're going to spend some time talking about these three things and some exceptions to some of these rules as well. But the three things are that a statement that no goods or services were provided in return, if that was in fact the case, or a description and good faith estimate of the value of the goods or services that the organization did provide in return. And that's that quid pro quo that we've sort of mentioned a little bit. So if you give something a value in return, a quid pro quo, that needs to be carefully identified. I want to make a point of the fact that for the value that you put for what's given in return, it doesn't matter if the charity got those items donated to it. It's the value to the donor. So if the donor receives a sweatshirt, and even if that sweatshirt was donated to the charity to give to the official donor, the value of that sweatshirt, the fair market value of that sweatshirt, is what you have to include on your receipt. There are some exceptions, and we're going to talk about those in a little bit. But the third possible statement that you would include in the content of your acknowledgement would be that goods or services that were provided consisted entirely of intangible religious benefits, of course, if that was the case. So now let's spend a few more minutes talking about quid pro quo donations. A contribution made by a donor in exchange for goods or services, as we've mentioned, is a quid pro quo. The amount cannot exceed the total amount of the donation. Otherwise, it becomes an exchange transaction and it's no longer a donation. So what does that written disclosure have to include when we're talking about a quid pro quo? Well, the rule is actually, if a donor gives $75 or more and receives something in return, the charity must give a written acknowledgement. So you've got the $250 requirement, and then you also have this additional quid pro quo $75 requirement. And the written acknowledgement must contain additional information. It must state, as we said before, the value of the goods or services that received in return. And it should state that, so for instance, if I pay a $100 donation for a charity event, and the value of what I'm getting by attending this charity event is $40, then my donation receipt should say, thank you for your contribution of $100. You receive goods and services in the form of a dinner valued at $40. Your potential tax-deductible amount is $60. We have sample acknowledgments in our acknowledgement guide, and further in the presentation we have a link to that, and I will share that again when we get to that. So the donor has to give that good faith estimate, that $40. And it's important to come up with that amount and write it down and keep that so that you know how you came to that amount in case it should ever be questioned. Another thing that I want to point out is that you can't put that language about goods or services received in return in like teeny tiny writing. It has to be in the same font and size that that all the rest of the donation acknowledgement is contained. It has to be obvious to the donor that that is part of the analysis in their deduction. I also want to point out that there are actually penalties for charities if they don't do this written disclosure right when it comes to quid pro quos. It's $10 per contribution, not to exceed $5,000 per fundraising event. But if you do this throughout the year, those costs can really add up. So it's really important to get it right and to document it, and to document how you came up with the amount of the quid pro quo value so that you don't run into any of these issues.
Robin, we have a question. Someone has asked me if membership dues are tax deductible.
So I am going to get to membership dues in a few minutes. There are some exceptions to these rules, and we're going to talk about that. When describing goods or services to an organization, there are two situations where you can take deductions, and one is the token exception, which is fairly complicated, and we're going to go through it, and the other is the membership benefit exception. So under the token exception, there's a rule that you don't need to describe when you say no goods or services are provided in return. You can keep that statement if all that the charity is giving back is something that is insubstantial goods or services, or what's called low-cost articles. And that sort of comes in two different categories. First is something that was provided for free. So I give a $100 donation, and then I suddenly get back, you know, a little pen or some gift cards, you know, cards that I can, not gift cards, but cards that I can give out, holiday cards that I could give out to friends and family from the charity. And I didn't expect that. I didn't know I was getting that, and it was just basically free and unordered. Still low-cost items. It can't be something significant. And this is where it gets really complicated. And you also need to understand that this particular area of the law changes every year, so the numbers that are located on this slide will change for 2018. So these are the 2017 numbers, and it's based on inflation. So the payment occurs in the context of a fundraising campaign. So we are trying to raise money, and we say we will give you X in return for your donation of so much. You have to consider that the cost of the item to the donor cannot exceed more than either 2% of what the donor gives or $107. And it's the lesser of the two. So if you calculate that out, the donor has to give $5,350 for it to be 2% to make that $107. So usually in most situations, it's going to be the 2% rule. So as long as I give something back in return that is 2% or of my donation, then I am okay. The other rule is, and this is where probably more of our clients fall into this category, is that the donor's donation is at least $53.50 or more, and the donor receives some kind of token item. Maybe it's a mug, maybe it's a pen, you know, something small that has sort of the organization's information on it, and that value of that item doesn't exceed, the cost of that item doesn't exceed more than $10.70. And that's considered a low-cost article. So those are the rules for the next month, but it will change potentially in 2018. And you can reach out to your accountant or attorney to get those updated numbers. Now let's talk about the membership benefits exception. Now whether your membership dues are deductible will entirely depend on what that membership is to the organization and what benefits you're getting back, because these are benefits that are accepted. So I can't generally state that all membership dues are deductible, because that's not the case. You have to go on a case-by-case basis, and membership organizations should make that determination and provide that information to its members. But there are these benefit exceptions that are considered things that you don't have to state goods and services were provided in return. So you can avoid saying goods and services were provided in return if the annual membership payment is $75 or less, and the benefits include any of the following. So any rights or privileges that the member can use frequently as a member. Things like free or discounted admission to the organization's facilities, discounted parking or free parking, preferred access to goods or services. Maybe there's an exhibit that you get access to first, or discounted purchases in the gift shop. Those are the sorts of things that aren't considered a quid pro quo. It doesn't rise to the level of having to put down that goods or services were provided in return. In addition, and this is kind of another specific item, but membership admission while a member to member-only events, so long as the value or the cost of attending that event is not more than $10.60. Again, this changes every year. So be on the lookout for the changes for 2018. So now we've talked about sort of when you have to include, or when you can include, no goods or services were provided in return on your receipt, or what you need to put if goods or services were provided in return. So now let's turn briefly to that intangible religious benefit exception. And it's pretty basic. It says that if you have intangible religious benefits, that's equal to benefits provided by a tax-exempt organization operated exclusively for religious purposes and are not usually sold in a commercial context. And that's important. So if you meet that requirement, then if that religious organization provides only intangible religious benefits to the donor, the acknowledgement simply has to say that. And that's the rule for intangible religious benefits. So now we've talked about sort of the content of what has to go into that written acknowledgement. And let's talk about the format and contemporaneous, which we talked about earlier on, that it's important that it be written and contemporaneous. There's no actual format that the IRS requires, so you're free to write it however you want. It also can be in a letter, it can be in a postcard, it can be in an email. It can be computer generated. It can even be a payroll deduction or a pledge card, but it has to be very clear, and you have to make sure all of the proper information is included. And like I said, it can be paper or electronic. Next, turning to contemporaneous. What does contemporaneous mean? Well, contemporaneous typically, most organizations typically provide their donation receipts by January 31. And there's a good reason for that. Because the rule is that it becomes contemporaneous so long as the donation receipt is received by the donor prior to the time the donor files their return or the due date of that return. Well, most donors don't file their returns before January 31st because that's the due date for W-2s and 1099s. So they usually don't have all their information that they need to file their return before that date. So if you get all of your donation receipts that you receive throughout the end of this year, the end of December 2017, and you, by January 31st of 2018, get your donation receipt letters out, you should be fine. I want to take a minute to talk about a really important case, and that's the Darden case, because this is a real-world example of how this can go very wrong. So the Dardens, sorry, not the Dardens, the Dardens gave a significant donation, over $20,000, to their church, the Nevertheless Church. And the church gave them a donation receipt that said, "Thank you so much for your donation of $20-some thousand. We appreciate receiving that." Well, they were audited, the Durdens were audited by the IRS over a year later, and in the course of that audit, they determined that the donation receipt did not say either no goods or services were provided in return, or what was provided, or only intangible religious benefits were provided. So there's nothing. So they said that was insufficient. So the Durdens went back to the Nevertheless Church and said, "Please give us a new receipt." And so they gave them a new receipt that said only intangible religious benefits were provided in return. Well, the IRS said, "Sorry, that wasn't contemporaneous. You didn't receive that before you filed your return." And they denied the deduction for that $20-some thousand for the Durdens. Well, as you can imagine, the Durdens were not very happy. So it's really important to make sure you get your donation receipts right so that your donors will be happy and continue to donate to you. As I mentioned earlier, Pro Bono Partnership of Atlanta has an acknowledgement guide on our website. It includes sample acknowledgement. It also covers some things we haven't talked about, for instance, like stock donations. And so it has additional details, and it can be found at this link. We're now going to turn to substantiation of large non-cash donations, which I mentioned at the beginning that we would hold off and cover those towards the end. So if a donor's deduction for non-cash contribution is more than $500, in other words, they're giving an item that's valued at more than $500, that donor has to complete Form 8283, non-cash charitable contributions, and attach it to his or her tax return. And that's sort of just the beginning. So if it's more than $500, they have to include that. If the donor claims a deduction of $5,000 or less, the donor must complete only Section A of that form. But if the donor's deduction is $5,000 or more, the donor will need to get a qualified appraisal of that item and fill out Section B of that form. If the donor claims, and there's a typo on my slide, so please excuse that, but it should say $5,000, not $500,000. If the donor claims a deduction of $5,000, the donor will need to actually attach that appraisal to their return in addition to that Form 8283 to their tax return. So now let's turn to vehicle donations, which tends to be the most common area that our clients encounter. It's not incredibly common for our clients, but it does happen. So let's turn to that. So basically there's ramifications on the charity in terms of substantiation based on what the organization does with that vehicle. So depending on what the organization does with the vehicle, they have other additional substantiation and disclosure obligations. So let's start with, what can an organization do with a donated vehicle? Well, it can keep it or it can dispose of it, right? Those are the two options. If a charity chooses, or a nonprofit tax-exempt organization chooses to keep a donated vehicle, the organization has to use that donated vehicle in its charitable programming. And it's really important that it be used for its charitable purposes. And that use can't just be that use, but there's other requirements. It has to be regular, it has to be used for a significant period of time, and it has to be used, again, like I said, for the organization's charitable programming. I'll give you a great example. An after-school program for disadvantaged children gets a van donated, and that allows them to drive some of these kids home at the end of the after-school programming. That's clearly being used in their charitable purposes, and they use it every day or 3 times a week or however often they meet, and they plan to use it that way indefinitely. And that would qualify. If the charity chooses to dispose of the vehicle, they can do it in one of two ways. One, they can donate it or distribute it to a low-income individual and they can do that for free or at a cost that's significantly below the fair market value. But a charity can only do that if it's in line with its charitable mission. So if my mission is to rescue pets, and I decide to give a car to a low-income individual, that's not in line with my mission. So that wouldn't qualify, and that wouldn't be an appropriate way to dispose of property that was given to you for your charitable mission. The other option is to sell the vehicle and use the proceeds exclusively for your charitable mission, which is what a lot of our organizations end up doing. So what is required when that happens? Well, the nonprofit must generally provide the donor with a written acknowledgement. And what does the content of that written acknowledgement have to include? Well, it depends, of course. It always depends. It depends on the value of the vehicle and then how the nonprofit uses that vehicle. So if the vehicle is valued at $500 or less, there's one set of rules. And here's what they are. The written acknowledgement should include, and I've included a lot of this detail on the slides so that you can go back and refer to them and have that. We also have an article on vehicle donations that covers all of this on our website, which I have a link to later in the materials. But I wanted to make sure it's a lot of detail, so I wanted to make sure I included all that information in these slides. So the written acknowledgement should include the name of the nonprofit and the date of the donation. It needs to include a description of the vehicle, including the vehicle's identification number or VIN number. Whether the nonprofit provided any goods or services in return, as we've been talking about, and if so, a good faith estimate of the value of those goods or services. And then the acknowledgement should be provided to the donor in the same rules, by the time the donor either files their return or the date that it's due. Now that's only true for vehicles of $500 or less. When we get over $500, there's a whole other set of rules, and that's what we're going to turn to now. The written acknowledgement for vehicles that are over $500 has to include name of the organization, the organization's EIN number or employee identification number, the donor's name, the donor's taxpayer identification number. If it's an individual, that's usually their social security number. If it's a business, it may be that business's EIN number, and sometimes people have just regular other types of tax identification numbers. The date of the donation, the description of the vehicle, including the VIN, whether the nonprofit provided any goods or services in return, as we've talked about before, and of course if they did, the value. And then there's additional information that has to be provided, and it depends on what the organization is doing with the car or the vehicle. So there's 4 different options. We're going to quickly go over those. So option 1 is nonprofit uses the vehicle, with my example that I gave before involving the after-school program. That van is going to be used by the nonprofit. Well, in that case, the acknowledgement needs to say that a statement certifying that the nonprofit intends to make a significant intervening use of the vehicle. In other words, they're going to use it for a period of time. What that intended use is. So as a van to drive the kids home from the after-school program. The duration of that use. In this case, we said indefinitely. As long as that vehicle will be good and solid, we're going to keep using it for that purpose. And then a certification that the vehicle will not be sold during that duration. So, and it may be that you choose to say only 3 years, but it's got to be a significant duration. It can't be, a few months. It has to be longer than that. And then the acknowledgement has to be provided, and this is where it changes, within 30 days of receipt of the vehicle. And that's important. So you've got to act quickly to get this donation receipt out. Option 2 is that you've given that vehicle to someone who is needy, and that we talked about that, whether you give it to them for free or whether you give it to them at below fair market value. Again, it's got to be part of your charitable mission to provide those kinds of services and to serve that charitable class. So if you intend to do that, then you need to have a statement that you intend to do that. And you have to have a statement that the gift or sale is in direct furtherance of your nonprofit mission. And again, you have to give that notice and the entire acknowledgement within 30 days of receipt of the vehicle. So if I'm an organization that serves the homeless or that serves low-income individuals who are struggling, and I collect a vehicle and I decide we have a vehicle program where we provide vehicles at very low cost or no cost to some of our clients who need them to get to work and they've lost their vehicle or they didn't have one, we would provide that kind of statement within 30 days and complete all of the required information. Now let's say you get a vehicle valued at more than $500 and you just decide you're going to sell it and use the money for your purposes, which happens an awful lot. In that case, your statement has to certify that the sale occurred in an arm's length transaction and between unrelated parties. So it can't be within, it can't be with your board chair. It has to be someone who's an unrelated party. And it has to be at an arm's length transaction at fair market value, the date the vehicle was sold, and the gross proceeds received from the sale. And that's really important because a statement that the donor's deduction may not exceed those gross proceeds, because here's what might happen. The donor gets an appraisal done, and it's at X, but then a month later, the charity sells it in an arm's length transaction and only gets Y, not as much. Well, the donor can only take a deduction for Y. And it's really important to get that notice out to them within 30 days of the sale so that they know what amount they can take as a deduction. The last option, and that is you get a vehicle and maybe it needs a lot of work. So you decide you're going to do material improvements to the vehicle. In that case, whatever the donor takes as the deduction from the appraisal stands, because after the material improvements, it's going to have a whole different value. And who knows how long those material improvements are going to take. So you have to provide a statement that you intend to make material improvements to the vehicle and what those improvements are, a detailed description of those, and that the vehicle will not be sold before those material improvements are made. Once those material improvements are made, then the organization can go ahead and sell the car. But the acknowledgement that I just described has to be provided to the donor within 30 days of the contribution. So those are what has to go in the written acknowledgement. But I also want to briefly mention, and I'm not going to go into too much detail on this, that both the donor and the organization have a variety of filing requirements involving the IRS in connection with vehicle donations. Nonprofit organizations often have to identify those on their Form 990, and the organization may have to complete Form 1098C, which is where the charity has to file a copy of Form 1098, copy A of Form 1098C to provide the written acknowledgement. Now, the other option is 1098C is an option that includes all this written acknowledgement information that we talked about. You don't have to include that. You can just provide the acknowledgement itself in certain circumstances. But it's easiest to complete Form 1098C to report the information. That form is due by February 28th or March 31st if you're filing electronically of the year following the year in which the charity provides the acknowledgement to the donor. In addition, Form 8283 has to be completed, and if it's over $5,000 in value, then the organization has to sign that form in addition to the donor completing it. And then Form 8282 has to be completed by the organization in certain circumstances. This is a lot more detail than we have time to cover. All of this information is included in Publication 526. But it's also included in two other publications that are presented by the IRS. And those involve vehicle donations. And one is geared towards donors providing vehicles, and the other is geared towards charities accepting vehicles and what they do with them. And those publications are 4302 and 4303. So if you're getting into that business, I highly recommend that you read those publications and consult with your accountant or attorney to make sure you're doing it correctly. There are a lot of companies out there that offer to sell vehicles or collect vehicles on your behalf. Some of them do it right, and some of them do it wrong. And it's really important to evaluate and understand when they're doing it right, because in some cases the donor doesn't end up being able to take a deduction if it's not being done right. And that will reflect badly on you as the charity. There's another thing that I would be remiss if I didn't mention involving vehicle donations, and it doesn't really have to do with the IRS or written requirements, but that is Georgia state law. So if you get a vehicle donated to you, you need to make sure you actually transfer the title of that vehicle into the name of the organization. Even if you're going to give it away to someone else, you still have to get title. You need to make sure that you're addressing any sales tax issues with this donation. As well, because there may be sales tax issues, or when you sell it, there may be sales tax issues that you need to contend with. In addition, you also need to make sure that if you're in sort of this vehicle donation solicitation mode, that you're in compliance with the Georgia Charitable Solicitation Act and that you're registered to solicit for donations in the state of Georgia.
We have a couple questions. One's about in-kind donations. Is it okay if an acknowledgement letter does not list the value of the in-kind item because the value is estimated by the donor?
It's absolutely the appropriate way to do it. So if you get an in-kind donation, you should not, as a tax-exempt organization, list the value of that item. It's up to the donor to determine that. And that's why, as we've talked through all these issues, when we're talking about vehicles valued at under $500 or more, it's an impetus is on the donor to address these issues with the charity, and to get the appraisal is needed and so on. So it's really on the donor to make sure that those things are put into place. And if you go to our acknowledgement guide, we have a specific sample letter that you can use for in-kind donations under $500, and then also one for items over $500. And it's not for you to determine that $500 amount. The donor must let you know that.
And what if an organization plans to raffle or auction a vehicle that's been donated to raise money for the organization?
If an organization plans to raffle or auction a vehicle, that's like selling it, and they need to assume that it's the equivalent of a sale. There's so many issues involved with auctioning off vehicles. First of all, many purchasers of these kinds of raffle tickets don't realize that they will be required to pay income tax on the value of their winnings, and they may not be able to afford that, and then therefore they end up having to sell the vehicle. So it's far more complicated than people realize to auction off vehicles. Also, if that vehicle came out of inventory from a dealership, that dealership must pay sales tax on that vehicle when they donate it to the charity. There's a lot of various different issues that need to be contended with when you're talking about receiving a vehicle and then using it for that kind of a purpose. I want to briefly mention record keeping a little further. It's really important that you maintain receipts and keep all of the acknowledgments, written acknowledgments that you give. You can keep them electronically. It doesn't have to be in paper, but you need to carefully track every thank you letter that you send out, every donation receipt that you provide. It's really important to have all those records in an orderly fashion. In addition, if it does involve vehicles, you need a mechanism for tracking all of that information and having records of how each vehicle was addressed and handled. Also recommend keeping records of any charitable registration filings that you do, whether it be in the state of Georgia or elsewhere. And then fundraising activities. So we've talked about situations where there are quid pro quos given, and that's often involving fundraising activities, a fundraising promotion of some sort. And it's important to keep records of how did you come up with the fair market value of those items when you're acknowledging them in your receipt. It's important to carefully track what's being given in different fundraising arrangements that you have going on. And then also I want to make a specific note of sponsorship packages. Often sponsorship packages involve giving something back in return. And again, it's really important to track who got those sponsorships and what the deal was and what they got. And sometimes a sponsorship may include, like, you know, a table at a gala, but the donor doesn't, or the sponsor doesn't want to take advantage of that. So you need to track that really sponsor by sponsor. And it's important to maintain all those records in case the organization should be audited, or one of your donors should be audited and they come back to you. So it is really important to take time to make sure that you keep track of all that. Finally, the next slide has a whole lot of additional resources, many of which I've mentioned throughout the course of this presentation. Some of them are our materials, some of them are from the IRS, but they're very useful resources. And that concludes my remarks. Are there any other questions?
I'll give everyone an opportunity. We have an organization that's going to reduce rent.
As I mentioned earlier, partial use of space is not deductible. So just because a landlord chooses to reduce their rent, they cannot take a deduction for that.
And we have someone else typing up a question right now. We'll give them an opportunity. Can you touch a bit more on acknowledging and reporting in-kind services?
So in-kind services are not deductible. If somebody provides a service, it's not deductible. If somebody provides an in-kind good, then you simply, in your acknowledgement, identify what those items are and thank them. And then if you gave anything in return, you need to say that, or say no goods or services were received in return, whatever the case may be. But you don't identify the value of the goods that were provided.
We'll give an opportunity for one more question. Okay, no, it looks like all the typing is done. And yeah.
Thank you very much, and have a great day.